Maybe if you can highlight some of the interesting insights that we see here in this bank branding survey here. Does it necessarily correlate with market sentiment or the views that investors share on banks here, David?
It's not always necessarily correlated. Sometimes we find that banks have extremely strong brands that are going to be resilient long term, but investors take a short-term view about the particular bank. So here in the UK, during the crisis, we found that some brands that were very strong and have revived sat inside companies where their share price had been whacked. So quite often it's correlated, and certainly in the long run it's correlated, but sometimes in the short run there can be a difference.
David, if you can tell us about Wells Fargo, what's working for them, having been voted the world's most valuable bank brand?
Well, the primary thing about Wells Fargo is they are totally focused on customers. They have the most amazing relationship with their customers. They get to know them well, they understand what they need, and they measure themselves by the number of customer products that their customers take. So you very often find, certainly in the UK, with some of the more cynical and tired banks, that the average number of products they sell their customers is like 1 to 1.5. Whereas with Wells Fargo, once they have a relationship, they try and develop as many products as possible, and it's a multiple of the number you get with the banks here. Net result, they make a lot more money and have much happier customers.
What interesting insights can you share? Because I'd like us to take a look at some of the valuable banks in Africa. Absa comes up as the top one here in South Africa, followed by First National Bank. I would have thought it would be the other way around, especially given the creative technology surge that First National Bank and that advertising campaign that they've really had a strong hold on in South Africa.
Yeah, I mean, FNB is an incredibly good bank. And it's made huge progress, and it's stepped up through the ranks over the years. There's no two ways about it that FNB is a great bank. The thing is that there are two measures that we're looking at. One is brand strength, where we look at a whole variety of measures, including customer perception and quality of products and brand equity and so on. And FNB does very strongly on that. The second thing we look at is absolute scale. You know, how much revenue do these brands actually generate? And now and into the future, Absa has a slightly higher projection according to the equity analysts. And our valuations are driven by the consensus view amongst analysts about the level of revenue that the brands are going to generate. So Absa just slightly beats FNB, but FNB is certainly growing very fast.
Is this the same winning formula we're seeing working behind several Chinese banks?
Well, the Chinese brands generally in all sectors are growing very fast. China is obviously the phenomenon of the decade. They are rapidly approaching the US in terms of size of their total economy, and in their domestic market they are growing extremely fast, which is why their brands are growing very fast. And then on the back of their domestic success, they are going abroad. So here in London, 5 years ago, you did not see any Chinese bank presence. Now they are everywhere. All around the Bank of England, we get the head offices of the Chinese banks, and they are growing very, very fast. I think the same thing is true in Africa. The Chinese banks are now becoming in behind their economic power. So the question really is, within African countries, can they leverage themselves on the growth of the African economy? Certainly that seems to be happening in South Africa. South African banks are very strong and the brands are very strong.
David, what about the role of ratings agencies? Does this play any influence in your survey?
Well, when we're doing our brand strength index, we have 3 chunks of measures that we look at. One are input measures, which is things like the amount spent on advertising, the amount developing the brand, the amount of internet coverage and so on, the things that stimulate the success of a brand and why customers come to it. So that's input measures. We then look at what we call intermediate measures, where we are looking at customer perceptions. And we have market research, and we look to see just how strongly customers feel about the brands in our survey. And that accounts for about half of our brand strength measure. And the third measure is outputs. Now, in amongst those output measures, we are actually looking at the rating agencies' perceptions of these banks, and so we take it into account to some degree. But the predominance of our brand strength measure is looking at the input measures, which determine how strong the brand will be in the future, and the equity measures, which say how strong it is right now. The credit ratings are really a reflection of what has been achieved in the past.
David, thank you so much for your time and sharing the interesting analysis out of this report. That was David Haigh. He is Chief Executive of Brand Finance.